Job cuts rock global oil and gas sector. The global oil and gas sector is facing a downturn with widespread job losses and investment cuts. Falling crude prices, exacerbated by OPEC plus output increases, are making it difficult for Western majors to fund projects. And here's where I think this is kind of interesting. The Financial Times says the sector's under pressure as crude prices, which spiked after the Russian invasion, which have dropped by half. OPEC Plus has shifted its strategy, increasing output. I don't know how much everybody's worried about their 37,000 barrels per day that they're going to put out. I don't know that they can even produce that much extra. I don't have it, see it. I don't see the glut. I don't know that they can.
Yeah. I mean, it's really the oil and gas business, it's one of the reasons I love the business is because they're extremely principled, because this is an industry that votes majority conservative. Let's throw out who's the president and just go conservative liberal. I mean, the oil and gas business routinely, probably going back to the Reagan administration, voted conservative. Yet, every time, if you just overlay oil price and who's in office, whether it's a Democrat or a Republican, if you just color code the chart, it is obvious that under a Democratic administration, oil prices go up. And why? Democrats and liberals are more opposed to oil and gas. So what do? They restrict the industry's ability to do work. They make it harder to permit wells. They, things like what's going on with the Willow project up in Alaska get hung up and are unable to necessarily be permitted. You've got offshore drilling, which is really one of the key drivers of U.S. global oil production, makes it a lot harder. And what happens? We then have an imbalance between demand and supply. Demand continues to go up. Supply then stagnates or doesn't increase to keep up with rising demand. And we see an increase of price. The exact opposite has happened. And the most obvious example is President Trump right now. I mean, why do you think he has his phrase of drill, baby, drill? Well, it's not because he loves the oil and gas business. It's because he knows that energy underpins inflation and he wants to bring down inflation for all of America. And if you can bring down the cost of energy, that factors into every facet of the economy, whether you're talking about food prices, because food prices are driven in part by energy costs that it takes to move your bananas from Florida or your oranges from Florida to Texas, where I consume my orange juice every morning. So that it's so integral into the whole economy that he understands that if we lower the energy price, if we lower the oil price, it'll work its way through the economy. The problem is it does exactly what this article is talking about, which is it devastates the oil and gas business, because at the end of the day, the oil and gas business makes less money. And if they make less money, they don't need as many people. And we've seen this been coming now for 5 years. I mean, Stu, the theme of the podcast when I talk in the finance section is consolidation with rising costs to produce shale, declining reserves, and I don't want to say declining reserves, but wells that maybe aren't necessarily as productive as people thought. You've got higher input costs, which is also, there's some things along there, but rising costs to drill a well and flatlining production numbers make it really, really, really difficult to begin to squeeze more. You begin to squeeze less and less margin, and at some point you just have to lay your staff off. I mean, ConocoPhillips, we talked about this last week, 20 to 25% of their workforce is getting laid off. And I love this quote from Kirk Edwards. He's over there at Latigo Petroleum. He says, this isn't just a Conoco problem. It's a flashing red warning light for the entire U.S. oil and gas industry. And it's really sad.
I agree. Let me add this because I like Chevron's Mike Wirth. The way we protect most jobs for the people is by remaining competitive. And when you take a look at the Financial Times chart in there, as an investor in energy and oil, U.S. oil companies are always better to invest in than in the European oil companies. So, it's always good to be able to make sure you got to protect the shareholders' rights in the oil company so they can live and fight another day.
Well, okay, this quote from Mike Wirth, you just said it, I'll read it again. The way we protect the most jobs is by remaining competitive. What does that mean?
It means if you have to lay people off, you have to lay people off, but it's also doing best practices and drilling the best fields and everything else. So, I mean, I agree with it. You've got to do what's best for the investors and watch the bottom line. It is not. ESG has done a good thing for the investors, the governance, watching the bottom line. If you don't need the people, you're going to need to lay them off. This is going to rubber band back. And as the world needs more oil, it's going to snap back up. There's got to be a different way. So you don't need to let go people, bring people, let go people. It's just going to bounce back. It's a
And I agree.
cyclical.
In my opinion, this is more a shot at the administration than it is a signal to the investors. How do we remain competitive as an oil and gas, as a commodity-based business? You see higher prices. And I think the rhetoric coming from the administration, drill baby drill, isn't helping. And again, I can agree with President Trump in that energy drives inflation. And again, it's one of the reasons I love the oil and gas business, because I believe they're some of the most principled people on the planet, because time and time again, they vote against their best interest. I mean, you saw, if you're on X, there was a huge debate that went on at the end of 2024 on X about, well, if you actually really want to make more money as an oil and gas company, shouldn't you be pro Kamala? Shouldn't be running around the street with Harris Waltz flags, because that's going to drive oil to $100. I mean, obviously we don't want to do that because there's a country at stake. So we don't necessarily, it's, what do you put, my job or the country ahead of it? And again, it's why I love the business, because I feel like oil and gas folks are some of the most principled in the business.
You bet.